Good morning, everyone. And I just noticed that there is a date on that thumbnail. So I did not notice that since yesterday. I need to correct that. I guess we're doing just the same December 11 over and over and over. But let me try to change it for today. Let's take a look at today's 16th. All right. So I'll be updated. I'll see if I could update that thumbnail date. But thank you for that, Piper. Really appreciate it. Did not notice it. Didn't want to notice. All right, so seems like we might have a tax refund for quarter number one on 2006. We'll see how that go. I mean, we were supposed to, or you're supposed to be getting that tax refund for a lot. I mean, for a lot longer than that. But we'll see how that goes. In the meantime, what's up, everyone, and welcome to the Piper Academy. Hopefully, you guys are having a fantastic day. And of course, let's take a look at the rest of the. Let's take a look at the Bitcoin price chart. Sorry, things are just getting crazy on the Discord at this point, and I'm just trying to get past the notification. All right, perfect, much better. Got it. All right. All right, so let's go over a couple of things in here. Let's get started with the Bitcoin chart. Let's take a look at that. Okay, right here, it seems like we're still not fixing here, but we'll do what we can. Let me see if I can compress the chat just a little bit in here. There it is. I think that is much better. Let's put you guys over here, and we'll deal with that later with this extension. All right, so I think this is much better. Let's take a look at Bitcoin in here. We were talking about a support area right there, a possible migration to a lower part at 83,700 ish, and then a bounce back up. Right, remember this one in here. Although this little bounce doesn't really give me that much of a good vibe. And that is because if we didn't went all the way back down here and had that violent V-shaped recovery, most likely we might be seeing a very weak bounce to the upside. And I think that's exactly what we're seeing. I mean, at the end of it all, we have a big big wick at the bottom. The body candle, it is very small, basically creating kind of like a doji. Not really an indecision candle, but of course not a decisive direction candle. What is it there, Piper? Did you tag me? You said? Okay, I'm a little lost there. My company data for PMI jobs. I don't see where you tagged me. If you tagged me, I'll check that out in the meantime. Although, wait a second. Okay, I have to look into it. Nonetheless, let's take a look at a couple of things that have been happening here on the charts, and after that, let's jump into the news. So far so good. Let's go take a look at the daily in here on the Bitcoin price chart right now, and what we see is that basically we are on our way downwards in here. It's just the very first candle in here. What is up, Brett, Brett? What is up, my friend? Welcome, Dylan. What's up, VA? What's up, JB? Hulk Smash. Welcome, Jesse. Hey, Jesse, how's it going, my friend? Welcome. Great to have you here. Great to get you here. All right, so yeah, members chart in Discord. All right, perfect. I'll take a look at members chart in Discord in a little bit. Let me go over this really quickly, and I'll give it a look in there. Let me just move this out of the way. And well, at this point, well, what we're seeing right here is that we're going on our way down. We already have bounce a little bit right down in here on this support zone. This is one of my favorite tools, the volume profile bar magnifier order block in here. And well, at this zone, we either bounce with strength, which we are not, right? Or we go a little bit lower. How lower can we go? Well, our next area of big support is all the way here, somewhere around the 70s. In fact, if you see that V-shaped recovery, it is pointing at somewhere around there. Is it like for sure that we're going that way? I don't think so. I don't think that is for sure, but we have a very high possibilities to get there. Let me bring up my indicators to see what are they showing me. And of course, they are right spot on. So let me start getting a couple of things out of the way. So let's get started with the most basic zones like this. And we have a soft order block right where we're bouncing from. Right, let me just get rid of these extra lines in here and, of course, make a zoom in right here. And hey, local for crypto, how's it going, brother? Welcome, welcome. So we are seeing a little bit of a reaction here. I don't think that's gonna be enough. Maybe throughout this week, we might see just a little bounce back to this trend line. Remember, it's not about the breakout; it's about the retest. Although we also have this other trend line coming down strong, right? And we have a soft order block along with another volume profile order block. So what's it going to happen? We are right below that zero line. We are negative on our money flow and our consolidation score. It is telling us that we are basically at the end of that consolidation. So I will say that it makes sense, a lot of sense, to actually bounce or to actually break to the downside. Let's take a look at closer look to our oscillator because we have some clipping, and not any kind of clipping. We have some bright neon clipping in here. In the most cases scenarios, when we have that kind of clipping, we do see a bounce on the price action. So you can see it right here on the way down, little flat, and then after one or two candles, it bounces back up. So right now we already have the flat right here, one more candle maybe, and we could be looking for a bounce. If you take a look at the bounce that it generated, it went all the way up to the soft order block. So can we make it, maybe make it to 95, 96? I would say that there is a possibility, but based on how bullish or bearish we are, which is the prime score, and the fact that we are about to break that consolidation, I think we are going to get a dead cat bounce or a bounce on this trend line. So keep an eye on what's going to happen in here. I would say that the 4 hours is going to be leading the way. And the way to tell is very, very, very simple. Just do your trend line like this, right click on that trend line, lock it, and then again, right click and add an alert. So what are we looking for? Very easy. Let's go and take a look at, for example, this other range that happened. All right. So I said that we are somewhere around this area. All right. I think that we already are bouncing up in here and we have a trend line. So the only thing that we need to make sure of is how and when we break that trend line. All right. So let me give you here this example. So I think that we are within this candle right here. And if we start seeing breakout retest, I want to see a break above the zero line like in here. All right. But also I want to see the price action to follow along. Not only that, the only difference right now is our quantum reactor, and I see only very loosely because quantum reactor along with dynamic reactor are one of the most important areas of resistance, all right? So how or what would that difference do? That is because, let me now hide everything in here. There we go. We are riding or right against that quantum reactor, right? But we still have some space to the dynamic reactor. So if we start breaking that trend line, once again, this trend line, I think we are going to be going all the way to the dynamic reactor, maybe not all the way to the 103. And right here is where we could start looking for a flip back down instead of being that low in here. Nonetheless, this same candle doesn't inspire me any confidence in here on the price action, and I don't think that we are gonna make it. But once again, the market is not gonna be moving because I think so. It's gonna be moving because of its volume and because people buy things or sell things. All right, so let's get started here and let's go and take a look at the news. In the meantime, I need to go into the members chart really quickly and let's take a look at what we have in here. So let me just get this one here. All right, members chat and all the way down to where I was stacked. All right, perfect. So I got it right here. Thank you so much, Piper. Let me bring it up for you guys. Let's open up this link. And of course, let me go back and get this data going really quickly. So let's take a look at here. Okay, so it says the report confirmed the trend. Let me just move this over here, and we get started right here. The U.S. S&P Global Composite PMI flashed 53 out of 54, and well, we ended up at 53.2. So basically, not much of a change. The report confirms the trend. The U.S. economy isn't collapsing; it's losing altitude and that's the most dangerous space of policy markets. The Fed is where is it right here? Oh man, this has just moved on me. The Fed is starting at risk unemployment, cooling wedges, softening customers, and still tight financial conditions. So, yep, I mean, it didn't went as bad as we were talking about or we were expecting, but still, I do see a contraction of economy here, especially on the jobs. But once again, we start to be take a look at what we talked about yesterday, right? This is the result of many things. In between those things, the tariff. So as we start seeing some push on the government on helping small businesses, I think we could start actually turning this around in the short term. In the short term. All right. So other than that, let's take a look at here also what we got. I want to get started with a couple of news. In these news, and I don't know what this is just so late on my right. Okay, I have FX News, and they have a pretty neat report. So I want to share with a little bit of that report with you guys. And one of those, it's all the way here with the Ukrainian Russian progress on peace talks. Well, kind of like they want to keep a. Russia wants to keep a good portion of Ukraine territory. Also, I mean, Ukraine cannot join NATO, and well, you know, like this is going to kind of get dilute a little bit. Hopefully, if we don't have any other escalation, we should be basically okay. I want to go over the Venezuela could still affect gold's pricing here, turning our attention to America's backyard. Well, that's how they call it. The issue with Venezuela still persists. Especially, we would like to turn our reads attention to the comments made by President Trump to ground attacks are going to start very soon. So this is a little bit, I would say, urgent, implying that military escalation may be occurring in the table on and could lead to U.S. airstrike on Venezuelan territory. Moreover, considering the ongoing economic pressure behind the pile on Venezuela by attempting to curtail its economy lifeline by disrupting oil shipments, a confrontation either internally or by external forces in Venezuela may be nearing. Yet, in our view, for a significant impact to be seen on gold's price, a direct military confrontation between the U.S. and Venezuela may be required. Nonetheless, unless such a confrontation occurs, gold's price may remain relative unaffected affected. So I want to go over the price of gold because we've been keeping a track on how gold reacts. So let's go and take a look at gold really quickly here. And we got it right here. It should be very close to this area. Here it is. Perfect. So let's take a look at where we left out, right? So, and by the way, this is a very nice breakout that we had. All right, so we were talking about a possible flag fake out where we start seeing some flag let me turn this off again. Perfect. All right. So when we start seeing some maybe flagging, right? And I was telling you, hey, be careful. It is not a flag, and most likely it's going to be a range where we need to look for that higher low and then that breakout, right? So remember, we start tracking on these same areas right there. Remember, and it's been playing almost 1-to-1. So from this bottom right here, up, down, up, and breakout, right? From this bottom, up, down, up, and breakout. So something important, I was aiming for a possible rejection right in here. We did not have the rejection on the breakout in here, so I did not sold my my gold. Remember that we bought right down here, and we were planning to execute some solds in here if we start seeing that decreasement. Something important, I stand on what I mentioned. This is not a flag. Most likely this is going to be a range. And let's bring up a couple of my indicators in here. So I'm going to be just placing them all at the same time. So just be aware. All right. And from here, I'm going to start discriminating a couple of indicators to get a much cleaner version. All right. So I will say that these two are good. So let's zoom in here. The very first thing that we are seeing right now is a potential fake out or breakout on this trend line. All right. I wouldn't be that worried. First of all, we have two liquidity zones right up above us, right? I mean, right where we are at this moment. The first one, it is a previous high, and the second one is actually created on the first peak that we made. All right. So right here, this is where we should be getting our eyes on, right? This is where we're going to be making either the flip of the ribbon to the upside for the further continuation, which I don't think so. I believe that we're going to have something like this, and then a drop back down, and then we're going to have the actual flip of the ribbon, and then start seeing something like in here, all right? I believe that that's what we're going to be seeing up next, something like maybe one or two ranges, and then staying back above on this zone. That will be most likely taking us back to the trend line somewhere around the order block that we see. Look at that. We have a 77% bullish order block, a loud order block at these zones, along with this support zone. So remember, previous resistance becomes new support. I believe that we are going to be seeing this thing here like a double top. Remember, the golds love to make double tops, and then a possible correction somewhere around 4,231. So am I going to be selling some in here at these zones? Most likely, if we are breaking through that zero line, I will be selling some of the gold that I scoop in right down here. But so far, I keep waiting for confirmation. Remember, do not add without confirmation, especially not on these areas, because if not, well, we could start seeing for an actual breakout. But at this point, I believe that we are just at the top of the range or at the top of this movement. We still need to go a little bit lower, even maybe creating a fake out lower here to hit that quantum reactor. But we still need to take a look at what's going to happen here. Remember that gold moved because of uncertainty in the markets, and this is where we relate the Venezuelan and the Ukrainian conflicts happening at this point. If we see some escalation, we might be seeing the price of gold start moving because of the uncertainty in the markets. But yeah, let's take a look at a couple of other things in here because things are also getting a little fun. Let's go and take a look at X at this point, right? So also to get with the data that Piper showed to us in here, that we have rising unemployment, cooling wages, and softening consumers, still tight financial conditions. Well, we do see this, and it also talks about the composite of the S&P 500, right? The Kobayashi letter tells us that asset managers are extremely bullish on U.S. equities. Remember also that we talked about a dual reality right now on our common lives, right? For one hand, we have the S&P that it just keep pushing higher, and I mean, this thing is just being crazy how it keeps moving up, right? And I think, do I still have that chart? I don't think so, but let's just bring that up just so we have a perspective. Look at that. This doesn't seems to be like I was telling you. This doesn't seems to be like a decreasing economy, right? I mean, technically, we have made a lower high and a lower low, right? That's why we have those lines, right? This is concerning, yes, absolutely. But once again, look at the oscillator. It's almost getting into bouncing zones, and we're getting closer to this area of support, right? So if you look at this, you don't really say, hey, yes, you don't go initially and say, hey, economic disaster, right? I mean, yeah, of course, we could be looking at some retracement. I don't think it's going to be that massive like it is like in here. All right, that happens. Let me just push that earlier on this year, February 24th of 2025, right? But it's still, I mean, this is the 4 hour, right? Not much to really go about it. And this keeps just pushing. We just need to keep an eye on the parabolic trend line, or better yet, on our dynamic reactor, because if we have that lower high and that lower low, we could be getting into the next retracement like we see. But again, just to make the point clear, when you look at this, you don't go initially and say, hey, yeah, I mean, correction in the markets, right? You need a little bit more of that insight. And for the other hand, we have unemployment rising, right? So let's take a look at what they tell us. So net longs, and this is important, positioning by asset managers in S&P futures, it's up to 49%, near the highest record. So this is important. What happens when we have an imbalance in the market, right? And I already have spoiled the answer. If you paid attention to it, I already have spoiled the answer, right? But since 2022, net exposure has surged over a 400%. Current position is now near double the long-term average of 26% and sits more than two standard deviations above historical norms. So, by the way, standard deviation is one of the most used measurements to look at overbought, oversold. Furthermore, net long positioning in NASDAQ 100 future is near to the highest in decades. Meanwhile, the S&P has recovered 37 all-time highs these years. I mean, this year, come on, 37 all-time highs in one single year. Perfect, I guess. The third highest since 2020, after 57 last year on the 70 in 2021. Risk appetite for stock is historically strong. All right. Here's where we start talking about collapse. All right. This is like a house of cards, right? Let's go take a look at once again, a look at the chart. And spoiler alert, I already have given you what I believe could happen. And well, if we start building up and we are not only ones but two standard deviations above of what we should, that means that we are not only way over but also seems like there is an unequilibrium in the market. All right, that equilibrium needs to be, or needs to get into a correction. Remember, we have two realities. One reality for your first hand, it is the hungry appetite, right? That we have, like, for example, on the S&P 500, this is like an addict running on rate cuts, all right? So when we start seeing those rate cuts, we also see this kind of index surging, right? So I believe that that is what's going on. But also, on the other hand, well, you have the actual, I would call it the real reality, where we start seeing unemployment growth. We see groceries going high. We see the money is not really lasting as much as it should, so on and so forth. And this is where we can start talking about the poverty line. All right. This is important. I just made a little investigation based on some data that I found online, and the poverty line hasn't been updated on the way that it's being calculated since a long, long, long time ago. This is important because back in the day, when the poverty line equation was estimated, the food, groceries, was the most important expense in America. So, what is up at this point, right? We have rising unemployment, and then we're just looking at outdated equations from poverty line. So, what should we be talking about right now? If, like, we take a look at that same study, right, and we ask the same guy to do everything again, all over again, right? The very first step went, all right, family of four, average family of four. What is the average family right now? I would say a family of four again. Not only that, but then the next step is, all right, what is the most expensive that that family of four needs to cover? And at this point, it's not groceries. That is the second or the third biggest spend. But the most expenses are going into housing. So basically, having a house or house expenses and mobility, right? So what happens in there? What is it? Croc clogs. What happens in there is that if you start recalculating based on housing prices and what kind of family of four would need to the minimum earnings for get a household, right? Well, a millions of uh new additions to that poverty line will have to do. What is the issue with this? First, like from out of nowhere, you will see a poverty line going like crazy up, right? Because if you look at right now, poverty line, it's just basically a range, right? Basically, you can see that it hasn't had a growth, but we know that that is not truth. We can see it out there, right? Then well, the next thing will be government not looking that great, and then whoever administration that does that, well, will have to give away a lot of assistance or social assistance, which will at this point be hurting the U.S. economy because the number it's outgrowing faster that it should. All right. So other than that, this is when we start seeing right now that pressure between, hey, how much poverty is out there, right? And what is the most or the least amount of money that people need to have. And then you start saying, all right, well, we're just not, the numbers are, the math is not mathing, right? Numbers are not numbering. So this is where we start seeing, well, when the S&P 500 start getting these all new time highs and there's just not money out there, we could start seeing some flip around in those assets. Remember, the S&P 500 is an index based on the 500 most important U.S. Enterprises, right? So at that point, well, what if they start not doing great, right? What if they start, well, not losing revenue, right? So you'll see how the things start turning around and one reality start catching up to the other reality. So long story short, keep an eye for a possible unparity in the market. Keep an eye for some retracements in the market as we head into January, February, and March. All right. But at that point, well, we'll see how that goes because not everything is a bad news. Let me jump right here into really quickly the caveat later. Once again, breaking in sudden turn of events, Kevin Warsh is now official favorite to become the next Fed chair, 48 chances. So we were talking about this yesterday on Poly Markets, right? I mean, we were right here between Kevin Wars and Kevin Hoss. They are very, very tight together. Let me just refresh this just to make sure that we have the up-to-date data. 46 to 42, we start seeing a pick on Kevin Wars. We'll see how that goes. By the way, Fed decision, 50 basis point, not really happening. 25 basis point, maybe that's the one it's winning. But that is just on Poly Markets. So let's go back into the interesting news. This is another important one tied to the data that Piper helped us to get there. Breaking news, the U.S. economy added 64 jobs in November. Perfect. Above the expectations of 50,000 jobs, right? Unemployment rate rose to 4.6%, above expectations of 4.5. Once again, remember, employing grown weakening, right? Not for that much, but absolutely we're still steady, but we're still, presenting those signals. Unemployment is in the U.S. is now at its highest level since September 2021. The labor market is still weakening. So once again, remember, let me read once again what Piper mentioning here based on this data, right? The PME screams late cycle cooling, not strength, right? What does it tell us? Growth is positive, but fading, right? Inflation pressure continues to ease. Labor demand is like it's cool further, right? So again, we just see that, right? Forward demand is not accelerating. What is it not saying? Not recession yet, right? Yet I will say it being the keyword. And why is that? Because so far we're still heading to that, but slowly, like he mentioned, like a plane lowering altitude, right? No reacceleration, perfect, and no soft landing victory lap so far. Well, we need first recession claims to then get the soft landing, right? So we'll see how that goes. Once again, the Fed reinforces the case for rate cuts ahead. Perfect. We also can see not only in the Fed watch, but in the poly markets how they start turning events, not just for renewed hawkish, higher for longer. Narrative continues to weaken. Absolutely. I mean, we just saw a couple of days ago, right? Trump saying inflation is under control. He only needed to do wink, wink twice, right? But I mean, we'll see how that goes. Technically, might be, but I wouldn't really count on that. Equities support multiple expansions. Earning growth risk means elevated, right? Big cap resilience. All right, perfect. Small cap cycle calls. So we'll take a look at this in a second. Also to tie it out with Bitcoin. This country constructively bullish. This is constructively bullish. Slow growth, easing inflation, equal liquidity tailwind. Aligns with your border liquidity led cycle thesis. All right, perfect. So let's go and take a look at a couple of other news that I have prepared, and then we go into the most juicy things with, by the way, I want to bring this up here. Come on, here it is. All right, so Justin Trump family, by the way, guys, take this with tweezers, right? Justin Trump family backed America Bitcoin increases in BTC holdings. I don't know how to interpret this. Trump family backed American Bitcoin. Not 100% sure what they're trying to say, but I don't think the Trump family is backing Bitcoin, American Bitcoin for its for American benefit. I mean, might be good that they're not selling, but we started saying that Trump family, let me read between lines, it's accumulating, right? Increases its Bitcoin holdings to 5,098. Let me ask you a question. Would it could happen. I don't know. I don't know. Would that be possible that the Trump family, for some reason, may have some important data that we may not? I don't know. I don't think so, right? But I just see that they're buying Bitcoin. All right, so we just need to be a little bit smart about it and start looking at buying low, selling high. Still, I think this is a very interesting news how we start seeing those families or those big players right there keep buying Bitcoin. I mean, Saylor buying Bitcoin, the Trump family keep buying Bitcoin, so on and so forth. And still, not really big news so far, like not huge news, like, hey, Bitcoin Reserve, it's on, right? Brace yourself. I mean, nothing like that, right? Why isn't the government following? I believe because first, somebody needs to buy cheap, right? For then when the announcements happen, somebody can sell expensive, if that makes sense. All right. Economic calendar already, we already have seen a couple of results in here. We already have results on, well, non-paying farm rolls. And, well, not tomorrow, but Thursday, we might have more important data going for core inflation. This is the one that I'm most interested on. Both of these, core inflation rate, month over month, year over year, month over month November, and year over year November. CPI November, also I want to take a look at that one. Let's see how that plays out and rolls out. But in the meantime, well, it's going to be a little bit of a slow week, I would say, till we have that data. Just saying. And by the way, the thumbnail, right? The wrongly dated thumbnail on the show. It's just seen. Treasury Secretary Bezos says individuals may being the keyword, receive between a 1,000 to 2,000 tax refund in quarter 2026. Quarter 1, 2026. We'll see. Very funny. Well, why would you never get this? Yeah, I know. You're not alone, bro. We never get this kind of things in Mexico either. But, well, I think this might start getting in place with, well, with the narrative. Also, like, we're doing great. Also, I think this is going to be a little bit of oxygen for the American population, especially for those individual taxpayers. Hopefully, you guys get it. That'll be fantastic. $2,000 really does helps a little, right? So, and let's just take a look at WatchGuru because it had a couple of consecutive announcements. Treasury Secretary based China has met all negotiation commitments so far, and this is because of the tariff things between China and U.S. While U.S. employment rate rise to 4.6, highest in September. We already have seen that. Quarter in, perfect. Your 2,000, 1,000 tax refund. And here's the actually part where I believe Treasury says that China has met all negotiations to say then that, well, White House advisor says that the U.S. is not falling behind China. I think that's correct. I don't think that they're falling behind China, but I also think that China is a formidable competition, to say the least. All right. So let's go take a look at the liquidations really quickly before we get going. And, well, we see Rex in 24 hours, $497.19 million. Single largest liquidation comes at where is it? On Binance for 11.58 million. Not too shabby, right? Telling you. It's going to, whoever you are, come on to the YouTube, man. This is going to cost you, what is it? $4 or something like that? And I guarantee you that you're not going to be spending that 11 millions on a short to get liquidated, brother. All right, let's go take a look at here. Remember yesterday we were looking at the 86 area right down here. Guess what? We did nail that zone. Let me just refresh it so we have the most up-to-date data here. And, well, who would have guessed? data actually works to predict price action, right? So we had the direction to the downside. Right now, we have nothing else to liquidate right down here, and it would make sense to make a little trade back to 90K and then fall back down because this is a long way to go. Remember that yesterday we were also saying maybe we could be getting to 90.850 and then rose back down, but we went straight downwards. And I think that there's not much liquidity up in here, but it might be making some sense to go grab it and then go farther lower. Let's go back in here, and we have for now max pain around the same areas right here. Let me just refresh our glass node here, coin glass, sorry, and take a look at here. Same 87.189 for Bitcoin, max paint, and of course Ethereum base, same base areas, right? Solana 128. Not much have changed, and XRP again, not much has changed. Let's take a look at here. This have changed, by the way, and if you remember, there it is. Yesterday we have a lot of things in here, the back part, long closings and short entries. So what do you think? We have some long closings because it was getting stubbed out. At this point, we see a little more concentrated towards the center, so both shorts and longs in the decision zone, but we can see the base point of that area, the chunk has moved up a little bit, right? So we can say that the deviation have shifted a little bit towards the more positive side. I think that would reflect, this stalling that we're seeing right now, and maybe people are thinking that we are going to have a short-term push to the upside. So that is it for right now. Let's go take a look at a couple of altcoins in here. And let's touch base with Bitcoin. Once again, I believe that we have, let's go to the 4 hours. There we go. Perfect. I again think that we are going to be making this movement to the upside slightly bit and then coming back around. Right, as you can see, it is not as big, and that's not as big because we did not get all the way down here. But I don't think that we should worry about this push to the upside that much. I think this will be an opportunity to reallocate on dynamic reactor trend line, and of course the order block that we have seen for the possible rejection on this area, somewhere around 89,500, 90K ish for the next rejection, right? So once again, based on the heat map, would make sense to get back at these zones to then come back around, basically following the same structure that we were talking about yesterday. The only thing that I'm going to be doing is just rising up that thing a little bit just to reflect the actual area where we bounce from, and while doing so, we'll have a more cleaner chart in here. All right, let's go to a couple of icons. I want to take a look at BNB. BNB having a little bit of a better reaction to the upside. Great. Take a look at, or do expect the 889 to be taken. I think we're going to go up to the zero line. We see some money flow rising up. Nothing too bullish. Still, I believe that we can go ahead the 890 zone in here. Let's take a look at XRP. XRP had, there we go, and by the way, this played out very nicely. Had a short. We were talking about this short, if I'm not mistaken, on Friday. All right, and well, it did play it out. At this point, if you are still within in this short, it's time for you to take some profits. Not only that, start drawing your trend line in here, and we're gonna keep an eye on that trend line. We want to see something like that, and we start seeing this. Well, that's when we start head switching and considering this as a wild scenario. Nonetheless, if Bitcoin keeps dumping like as we are expecting, you could have maybe a possible entry right in here around the 202. $2.02 for XRP next possible short. Let's take a look at ADA. ADA, again, we were expecting that short. Something important about this short is that it did not went into our entry point. Too bad, because I was expecting that push over to that dynamic reactor, enter in there, and then collapse, right? But something important also is that we're getting to the area of re-entry. At this point, we could be looking for, once again, a micro trend line here, and I'm going to be adding a log to this, and of course, adding an alert to it, all right? Here it is. I'm going to be looking for a possible re-entry right in here. As you can see, oh, don't move that. Let's also lock that. And somewhere around these areas, you can see that I have marked the 0.36. But look at also my alert right in here. Almost hit that alert. I'm going to be waiting to see if we have a rejection, re-entry, and maybe try to get a Wyckoff bouncing here. Nonetheless, I still am bearish on ADA. Why? Because we haven't broke neither above the 0 line, neither above that dynamic reactor. All right, guys, so I will have to go at this point, but keep a track on what's going on throughout the day. And tomorrow, I'm going to be dedicating a little bit more time for the altcoins. We'll start to set a couple of entries, and I think it will be a good trading week. Other than that, guys, thank you so much for joining. And as always, see you guys tomorrow.
That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You heard it here first. Bitcoin is going to zero.
We'll see you at the next one.
What the fuck they're doing?
Morning market report out, 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 out. We'll see you at the next one. Morning market report out. We'll see you at the next one. Morning market report. Ow.
That was awesome, dude!
Hey, it didn't break. What else you got?